Ladies and gentlemen, good day and welcome to the Q2 FY24 earnings conference call of Wpil Limited, hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dhirendra Tiwari from Antique Stock Broking. Thank you, and over to you, Mr. Tiwari.
Thank you. Good evening, ladies and gentlemen. On behalf of Antique Stock Broking, I welcome you to 2Q FY24 post-result conference call of Wpil Limited. I am glad to have with us today Mr. Prakash Agarwal, Managing Director, and Mr. K.K. Ganeriwala, Executive Director of the company. Firstly, we will have introductory remarks on the results by Mr. Prakash Agarwal, following which we will open the floor for Q&A. Over to you, Mr. Agarwal. Thank you very much.
So, good evening, everyone. Welcome to our earnings call for the second quarter and first half of financial year 2024. Firstly, let me thank Antique Securities for hosting this call. Now, let me take you through the consolidated financial performance of the company. For the second quarter under review, the company's operating revenues declined by around 14% year-on-year to 348 crores. EBITDA grew by 44% year-on-year to 71 crores. The EBITDA margins improved to 20.37%. The quarterly net profit for this period was 43 crores with PAT margins of 12.32%. On a half-yearly basis, the company's operating revenues amounted to 706 crores, which was flat year-on-year. The EBITDA reached 137 crores, representing a 38% year-on-year growth. EBITDA margins also experienced significant growth at 19.44%. The net profit was reported at 83 crores, representing a 47% increase year-on-year, with PAT margins at 11.8%. On the operational front, in the last quarter, the company maintained stable revenues while witnessing improvements in profit margins. Revenue growth, which was expected for our projects, was hindered by supply chain challenges in this quarter, but we anticipate a rebound in the second half of the year due to overall improvements in all our operations. Our product business is performing well both in domestic and international markets across various segments. Internationally, we've seen enhanced margins, particularly with the growth of our aftermarket operations at Wpil South Africa and Grupo Aturia. A significant milestone was achieved in the defense sector as we secured a framework contract for fixed on-board centrifugal pumps from Indian Navy. The divestment of Ruchi remains on track with completion expected by end of 2023. With that said, we can open the floor for questions. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions, please press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take the first question from the line of Dikshit Doshi from Whitestone Financial Advisors. Please go ahead.
Hello. Yeah, thank you for the opportunity. Sir, at the start of the year, our project order book was almost around 3,000 crores. And the execution timeline is around 2 years. So we were expecting that at least 1,200, 1,500 kind of turnover we should be able to do from the project this year. But in the first half, broadly, we have done around, say, 300, 350 crores. So do you think we'll be able to, meet the deadlines of this project and we'll be able to achieve that kind of turnover?
So our order book was higher than 3,000. It was about 3,600 with O&M. So the contract revenues were 3,000. Yes, as I mentioned, that we faced some supply chain challenges, particularly in pipe supplies, which got deferred from this quarter, which was expected in this quarter. It got deferred. It should come in this third quarter. So we see a good growth and ramp up in execution, which is our target. Also, this is now the best part of the year for construction activity. So with the pipe supplies coming in place and the construction activity picking up, and overall our projects are well settled. I mean the engineering is well advanced, teams are in place. So yes, we do expect a very robust second half of the year.
Okay. And sir, what would be the sales of Rushi and the profitability reported in first half?
Let us wait for completion. The deal, as we announced, was roughly 68 point something million. Let us wait. The completion is targeted end of the year.
No, I was asking, sir, from the sales that we have reported in this first half, out of that, how much is the sales from Rushi, and out of the profitability that we have reported, what is the profit that Rushi has contributed?
Let me clarify that to you. So Ruchi in the first half is about 75 crores, and the EBITDA was about 10 crores.
Okay. And my last question, sir. Most of our this Jal Jeevan Mission contracts are from state of MP, and that state is now heading for election. So does it anyway slow down the execution in any way, or it doesn't affect us?
We are primarily working in MP and West Bengal, 2 areas, and we are now also expanding into other states. So I think it doesn't affect us so much. The elections are not really affecting. It may affect future contracts, because the state budgets are not fixed, but the execution is not affected.
Okay. Thank you, sir.
Thank you. Anyone who wishes to ask questions may please press star and 1 on their touchtone phone. We'll take the next question from the line of Deepak Purswani from Swan Investments. Please go ahead.
Good evening, sir. Sir, just wanted to check it out. One, on the supply side issue which you mentioned, whether this has been sorted it out, or this will, what exactly was the supply side issue, and in the second half, this situation has normalized, or this will continue?
So, as I mentioned, that the pipe supplies which were targeted, major pipe supplies were targeted in this quarter, they have shifted. So, they've already started in this quarter, and they should be very robust, invoicing in the second half.
So, sir, what kind of execution run rate should we expect in the second half from the project business?
We expect to improve on last year.
Then the last year numbers in the second half.
We expect to improve year-end numbers over last year.
Okay.
Also, typically the last half of the year, second half of the year is much more. The sales are much higher in that half. So we expect to keep that trend and exceed last year.
So, sir, on the standalone basis, last year we did a revenue of 1,000 odd crore, and in first half we did revenues of 375, and this year in the standalone we have again done close to 350. So, is it fair to assume this year we will also exceed somewhere close 1,000 plus crore in this year?
Yes, that's the target. We should exceed that.
Okay. And sir, in terms of the international business, it seems even adjusting for the Rushi, the EBITDA margin has improved significantly, maybe somewhere close to 25%. Am I right in my understanding?
Yes, I mentioned that the 2 businesses which have really fired this quarter and this half year is the Gruppo Atturia Italian business and the South African business with good after sales. So margins are good, and the business are looking very strong.
And sir, in the international product business, what is the growth we are anticipating going ahead? Because in the first half, the growth in the product business is close to 7% only. Should we expect this run rate to increase in the coming second half, or how should we see it going ahead?
As we had mentioned earlier, our focus is now firmly on the product business. As you can see, if you see the overall percentages are now improving in favor of product, otherwise also. So that's our focus area. We expect this run rate to further improve going forward on products.
Okay. And sir, my last question, can we also share Rishi first half number for the last year, previous quarter, in terms of revenue and EBITDA?
I don't have it easily with me, but typically Ruchi also the second half is better, so you know. Okay. But typically it was the revenues were around 20 million euros, so close to 180 crores.
For the full year?
Yeah, for the full year was 20 million, about 180 crores. So we have done about 75, so about 100 crores roughly. That was.
And sir, we also entered into the defense space with the recent entry in the Navy project. How should we look into the opportunity going ahead, maybe from the next 2 or 3 year perspective?
India is, has a big plan for adding about, I think 130 ships, naval ships of various categories. And simultaneously, the Navy has introduced new standards of specifications for all these pumps. So we are very happy to have entered into this framework, which allows us to develop, and we hope to get a significant portion of this business going forward.
Okay.
Pretty much, the Navy has introduced a 10 to 15 year program for about 130 ships.
Okay. And sir, on the international subsidy or proceeds front, I mean, from the Rishi side, the proceeds which we would be receiving from the Rishi side, what would be the utilization? Would we be looking out for the inorganic route through that proceeds, or would we distribute it to the shareholders?
See, I think number one, we are primarily looking at growth right now. I think with our strong balance sheet and cash flows, I think the idea was to reinvest in growth again into other various opportunities. We are searching for them. So we would look at inorganic opportunities as a first.
Okay. Okay. Thank you. Thanks a lot, sir.
Thank you. Anyone who wishes to ask questions may please press star and 1. We'll take the next question from the line of Devesh from Antique Stock Broking. Please go ahead.
Good evening, sir. My first question was on the order book. Out of the domestic order book, can you give a breakup between projects and products, and as well as O&M, if at all?
Yeah, so I think the order book is about 3,740. About 300 crore is the product, so 3,450 something projects.
And in the overall order book, the OEM number?
The OEM number would be about 500-600 there, 600 if you could take it. So 2,800.
Okay.
2,800 would be the EPC contractual book. Primarily, I would like to clarify here that we expect the order book to be stable or growing, but the pace is what we are adjusting. So it's not that we are not bidding or not booking. I think we are making adjustment on front of pushing revenues. The order book will be commensurate. So there will be no shortfall, but projects are 300, 400 crores, so we will be booking those. So we have some opportunities in the pipeline.
Okay. Apart from that, if you look at the overall revenue that you're doing around at an aggregated basis around 2,000 odd crores, so that comes out to be a big book to bill of around 2 times. So with the new project, like are we trying to look at some different types of opportunities in the project segment, like which segments that we are looking at for ramping up our revenue, and what type of growth we are looking at an overall level like down the line for 4-5 years?
The project order book, we are firstly trying to push our execution so that it gets balanced out. That means if you take about a 2,800 crore order book and we need to be executing close to about 1,000-1,200 crores per year. So once we achieve our good run rate there and the projects which we have in the pipeline are executed and handed over, which we are having good targets for in this year itself, then we will start ramping up again on the order book to keep it matching. So it's a fine balancing act, but roughly there is enough growth opportunities. That's but execution has, so booking is half the story. So we need execution to balance off. It's not a challenge for opportunities. I've mentioned this in the past. The opportunity space is about 1 lakh, 1.5 lakh crores. So I think the order booking is not such a challenge.
Okay. Thanks a lot. I'll come back in the queue.
Thank you. We'll take the next question from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah. Namaskar Agarwal ji. Namaskar Ganeriwal sir ji. Sir, if you could provide us with the order breakup for the international operations between product and project, I think so 8,275 rupee million is mentioned, 827 crore.
Mostly it is about, I think 95% product.
It is product. And the timeline, sir, executable period?
The timeline is, some of them are a bit longer because in Ruchi we have some longer contracts. But typically 12 months you can take it. So 12 months, that's matching with our annual sales.
Sir, out of this, how much is attributable to Ruchi, sir, the order booking?
I don't have that with me easily. I think close to, again, 250 to 300.
250 to, so that we may exclude because that will be, the next time it will not be.
What I mean to say, here in international order book, the sales are commensurate with order booking. So it's a shorter cycle. It will be matching. There's not much fluctuation there.
Correct, sir. Sir, and firstly, sir, congratulations to the board for this interim dividend part of 20 rupees, sir. It's a historical move for the company coming up, and I thank the board for considering the same. Sir, for the Navy order part, can you give the size of what kind of orders have we been dealing now, and what could be the order book since 130 naval ships you have mentioned? So depending upon the same, any color on the same you want to share?
I would, at this moment, I would like to add that this is a framework agreement we have in place, which allows us to develop these pumps. So these pumps, as per the new specifications, once we develop and which are approved and put into service, then you will see a regular flow going forward. So we are very happy to have made this penetration, and one of the first few companies to have made this penetration, and this should augur very well going forward. But I think we will come back in due course as the opportunities crystallize. But development is the first step.
Right. Sir, you mentioned that H2 is always, on the execution front, is always better because of the environment, the climatic condition also. So last year, we had a top line of, I think, so more than, it's closer to 1100 crore in the H2. So what kind of growth, sir, can we look on basis, on top of the one which we have done last year, sir? You gave some numbers, I think, so I missed it, about the product and the project top line growth. If you could just reiterate.
I want to say that we will exceed last year. So similar to last year, we have an aggressive target in the second half for execution, and that should lead us to exceed last year.
What kind of growth should we look at, sir? If we take the whole year as at FY23 and 24, over 23, what should be the ballpark number in terms of the growth, top line growth we should expect, sir?
I don't want to elaborate on that right now. We have an aggressive target for the year to achieve, but we are confident of exceeding the last year numbers.
Right, sir. I'll join the queue, sir, for the follow-up. And thank you, sir, once again.
Thank you.
Thank you. The next question is from the line of Richa Agarwal from Equity Master. Please go ahead.
So thank you for the opportunity. My question was, regarding this supply chain issue, because of which, the execution has been a little slower. I just wanted to know that, do these order books do they have a price escalation clause? And what happens if the execution gets delayed? What kind of timelines are allowed, or is there any penalties? And are you confident of completing and executing this order in the timeline in which it was expected?
Yes, first of all, we have a price variation clause which takes care of the prices. Secondly, prices are pretty stable, but we could not get the supplies as we desired in the last quarter, which have shifted to this quarter. Already in October they have started. So we expect it to help, the ramp up to continue, and we expect a very strong second quarter. So the price variation is not a challenge, it's just the revenue recognition.
Yeah, but even in the order book of the entire order book that we have within the product and the project segment, is there any portion or any part of it that comes at a fixed or lump sum payment, and versus the other part wherein
the shorter gestation contracts, mostly in the products, come with fixed thing, but longer duration projects are all with price variation. Most are with price variations.
Okay. And sir, because of higher share from international, I think you hinted that we witnessed a higher margin. But going forward, what would be the sustainable margin? Let's say, if we exclude the nuclear business out of it, what kind of sustainable margins do you foresee for the business?
As you can see this year, and as I explained to someone, that the margins have improved from the Italian subsidiary and the South African subsidiary, not from Ruchi. So Ruchi didn't contribute much in this first half. So you're not dependent. The international margins are not dependent on Ruchi.
Yeah. I just wanted to understand. Are you confident of maintaining these margins?
Yes, margins is not a problem. We will lose revenues from Ruchi.
Okay. Thank you. That's all.
Thank you.
Thank you.
We'll take the next question from the line of Nirav Seth from Emkay Global. Please go ahead.
So congratulations. I think it was a rather good set of results when you look at the cash flows and stuff. Sir, I have got two specific questions. Given the fact that you operate in niche capabilities, margin focused, and the pumps have various end-use applications, how do we look at the next 3-5 years from people who are not into the domain part? Are there any big sectors evolving where you would expect a non-linear demand for your product? For example, we are very big in thermal and that market crashed and something else comes up. That's my number one question. I want to get a perspective on which sectors are evolving, which end-use applications are evolving in the Indian market. And my second question is largely around what does it take to improve the execution capabilities? Let's say we are targeting 1,200 crores of turnover this year. How much of this, how do we expand the capacity of execution when you look at the next 3-5 years? How much is within your domain? How much does it depend upon the ecosystem?
So, good question. The first question I go to is that is our story, that we are very diversified across all segments of the pumping industry, having products which cover the entire range. As you can see from the introduction into the defense, that we could do it with internal capability to penetrate into a new sector, growing sector. So defense is a growing sector, clearly. Second similar sector in India is going to be sewage and drainage, which we are very focused on. We are seeing that grow. Further, I think, overall the irrigation and water supply sector, there is a long way to go. And we are seeing more traction now as, the Jal Jeevan is just a starting point, because it takes care of the rural capabilities, and there is a lot of urban, semi-urban, and a lot of irrigation facilities. So water will be a constant area of investment, and so we see these keeping on growing. What we clarified when we started these calls in March, that we are very happy with our business model. Our business model is strong and robust, which can be seen by our quarterly reports. Stability and consistency across sectors is what is our hallmark. if you see, all the international businesses are stable. So you're not seeing spiky, you're not seeing differing margins. And internationally, we see oil and gas. So if you come specifically to sectors, it's defense here, sewage and drainage are two. So it's the second sector. And internationally, oil and gas we see as a big, like if you heard recently, oil is getting difficult to extract. So we are seeing further new investments there. Our Australian subsidiary is also got a very strong order book right now. So that's the area. On the ramp up in projects, again, to explain our rationale, that we were at a much lower revenue threshold. Last year, we broke through into this 800-900 crores of revenue. And now with the order book support, there is a lot of engineering to be done, a lot of site development to be done, and then the construction activity comes. So there is a phase when suddenly you have acceleration of revenue recognition. So that is when you cross the project of 50% onwards, then the revenue recognition is faster. So it's nothing to do with us. Us was basically required to put in the necessary infrastructure, and now it's a matter of time.
Got it. Thank you for that. I had one more question. When you bid for your projects, what are the checklists you've got? I'm sure that you're very margin conscious, but what are the things that you try and avoid? There is one project that you picked up which is big in Jal Jeevan, but there are 100 other projects. What are the things that you look for while trying to zero down on what to bid for and what not to?
So one of the areas we are conscious of is that we are working in three major sectors in water. One is rural water supply, one is urban water supply, and the third is irrigation. So we want to keep balance in the three because the three have different dynamics. We don't want to be overextended in one sector. Today, very frankly, because of Jal Jeevan, we have a bigger exposure to rural, and now so we are focusing on urban and then irrigation. So that mix is important for us.
Perfect, thank you. Sorry, and I'm just trying to squeeze in one last one. Given that overseas acquisition has been one of the route for us to grow, again, can you share anything that you try and, because acquisitions are usually expensive and therefore probably dilutive to IRRs in the short term. How do you navigate that? Again, anything that you can guide us in terms of what you look for, both in terms of capabilities and in terms of expected returns?
Yeah, so we are not buying expensive, businesses just to build our revenue book up. So we are doing them for buying capabilities, and we're looking at synergies. Like for example, if I take our last two acquisitions, we acquired an oil and gas company in Italy and in Australia. So oil and gas was the sector we wanted to get into because it was fortunately available at a very low price. It was out of flavor with the market. And then we looked at two places where we could management synergy could be utilized. So in both, the factory in Italy which we bought was right next to our factory in Milan. So we could obviously merge the activities quickly. And the same in Australia, we bought another facility which was also in Melbourne with our other facility. So the two could be merged. So synergy and sector focus is very important.
Okay, thank you. I am done, and all the best to you, sir.
Thank you.
Thank you. We'll take the next question from the line of Deepak Parswani from Swan Investments. Please go ahead.
Yeah, sir, couple of questions from my end. Firstly, on the execution front, since you mentioned, this time it has been hindered by the supply chain. Could you please also share monthly billing? What has been the monthly billing in the month of October in terms of the execution on the project side?
I can't share that. So, but I can say again that we expect a very robust second half, which will more than make up for the little drop we had in the last quarter.
And secondly, sir, in terms of the order inflow, from the opportunity point of view, we did mention about the 1 lakh odd crore kind of opportunity in the Jal Jeevan mission. But if I'm looking from the order inflow, looking at the order book at the year end and at the end of first half, that seems to be the flat or order inflow has been pretty low. I mean, can you please throw some light whether there has been whether competitive intensity has increased significantly, or we are very choosy in picking up very selective orders? Can you please share the thought process?
Yeah, most importantly is that we had about 3,000 crore order book and our execution was 800 crores. So that is a very big gap, and the orders are generally roughly 24 to 30 months. So to actually be in some line, we needed to be at 1,200 crores. So we are working very hard to ramp up our execution to match the order book. You know, we don't want to be in a situation where we are incurring, damages and getting a bad name just because of rising order book and poor execution. So, the orders came in, which is great, which gives us a lot of revenue visibility. So the balancing act is what we are working on.
Okay. But sir, I mean, from the execution perspective, I mean, this year we would accelerate on the execution, but from the order inflow perspective, if we
you will see that it will be balanced.
Second half, possibly in the next year onwards, there may execution.
So we will be balanced on that. It's not a challenge. You will see that.
Okay. And sir, in the previous con call, we also mentioned about at some point of time in the future, we may consider increasing the stake in the subsidiaries. Could you please share the update on that part?
So we have entered into a binding agreement to divest our nuclear business, Ruchi. Now that business is, there are some conditions to that, condition precedent to the closing. So the closing is targeted by December of this calendar year. So we are proceeding, it is on track as I have mentioned, and we hope to achieve completion by end of this year.
Yeah, but apart from the Ruchi, in some of the subsidiaries we have a stake to the extent of 62 to 63%, which we highlighted that in the last con call we mentioned that we may consider to increase this stake in the other subsidiaries. So just wanted to check out any update on that part.
Capital, and we have to see how to proceed there, because we have to consider a lot of factors there, including mostly shareholder interest, what is beneficial, most beneficial for the shareholders, whether we should deploy the cash or deploy stake to, for Wpil to buy that stake. Valuation will increase, no? So we have to take that in account.
Sure. And sir, we also mentioned about the inorganic, we may consider the inorganic route. So could you please throw some light in terms of the geographies or areas which we would look it out, and what could be the quantum of the size of the acquisition we would target to fill up the gaps, or can you please throw some light on that one, please?
So most importantly, we are very much focused on our business of flow solutions. So we are looking at opportunities in segments and geographies in where we would benefit, from the acquisition. We are looking at some. We will update as soon some progress is made. Hello.
So whether, sir, this would be in the international market
we are looking at both. We are looking at both. And we are looking at basically all opportunities because, we want to optimize value for this, for the proceeds we get from the transaction.
Thank you. Thanks a lot, sir.
Thank you. We'll take the next question from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yes, sir. In continuation to this EBITDA margin profile, sir, you did mention about the international segment be posting higher margins. So, what should be the EBITDA margin we should expect going ahead for second half? I think so. For first half, consolidated numbers were closer to 19.44 as in the presentation. So, what should we look forward as for the EBITDA margin?
I think it looks very good going forward with the higher sales coming through. So, positive, but typically, as you have said, and demonstrated now that 15 to 20% is our baseline, and market realities help us here sometimes. So, I think with the improving of aftermarket, and the oil and gas business, I think things are looking good there.
So these can be sustainable numbers. These are not one-off numbers for as being.
Yeah, consistently you can see that 15 to 20% is our thing, and when the revenues grow, I expect when we are getting some growth there, we might lose a bit of margin, but then again our focus will be to build back margin.
Okay. Fine, sir. So it will be in the band as mentioned, but slightly closer to the higher side of the band. That at least we can consider going ahead.
Yes.
Okay. Thank you, sir.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Dhirendra Tiwari from Antique Stock Broking for closing comments. Over to you, Mr. Tiwari.
Thank you very much. Let me take this opportunity to thank the management of WPIL for giving us the opportunity to host the call. I also thank all the participants. Before I close the call, Mr. Agarwal, would you like to say any closing comment? You can please go ahead.
Thank you, Antique Securities, and thank you everyone for joining us and your interest in our company.
Thank you.
Thank you, members of the management. Thank you, sir. Ladies and gentlemen, on behalf of Antique Stock Broking, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.